Having the ability to make money passively provides you so much more financial security and freedom, because instead of working for your money like a typical 9 to 5, your money can actually be working for you on the sidelines. Now there's a couple strategies that you can do to start earning passive income, and most of these strategies are very low risk and really easy to set up. Now these strategies will obviously not make you a millionaire overnight, but given enough time, you will slowly start to see your money compound. So with that being said, let's get into what you can do to start earning passive income with your money. Now the first way you could start to earn passive income is through Treasury Bills. Now Treasury Bills are short-term debt securities issued by the US Department of Treasury. These are a great way to earn passive income because of their low risk, and it's actually really easy to set up. And what's great about these is that they offer tons of different options depending on how long you want to put your money in for. For instance, you can only have your money in these Treasury Bills for 4 weeks or 52 weeks and anything in between. So for Treasury Bills, when you do invest into them, you will buy these bills at a discount from their face value, and then you are repaid the face value upon the maturity date. So for instance, if the face value was $100 and then the face discount value was $99.50, you would pay that $99.50, and then depending on how long the maturity is, let's say it's 4 weeks, at the end of that 4 weeks, you're going to actually get that face value of $100 back. And if you want more info on Treasury Bills, I'm going to leave a link in the description below for the website to invest in Treasury Bills. The second way that you can make passive income is through dividend investing. Now, dividend investing is the riskiest option on this list, but generally the more risky an investment is, the more money you could potentially make, but also the more money that you could potentially lose. So with dividend investing, companies actually pay their shareholders a dividend from their profit that they make. Now, these payments could be once per year, every quarter, and sometimes even 1 month, depending on the company. It's important to note that companies can, for whatever reason, stop paying dividends altogether, so just make sure you're aware of that before you do invest in dividends. And another bonus with dividend investing is you could also get share appreciation if the stock does rise up. And additionally, what you can do with dividend investing is you can actually go to your brokerage and choose to have those dividends reinvested back into more shares of the stock. That way, any subsequent dividend payment will be a little bit larger than the last one. So the money that you do make from dividends will continue to increase each time. Alright, so the third way that you can make passive income is through high yield savings accounts. Now these are very secure and easy ways to grow your savings, and unlike normal bank accounts, these have interest rates around 3 to 5% normally. And below me right now are a couple of high yield savings accounts and some interest rates that they offer. And you can see that most of them are around that 3 to 5% range. High yield savings accounts offer you the ability to withdraw and deposit like a regular bank account, but just keep in mind that there might be fees associated with some high yield savings accounts, as well as a minimum balance that you are required to keep in that account for it to keep running. Another good thing is that your deposit into these high yield savings accounts are FDI insured up to $250,000, so in the event of any unfortunate circumstance, you would be covered up to that $250,000. So high yield savings accounts are a great way to grow your money passively and pretty risk-free. And if you want more information on high yield savings accounts, I actually made a video going over 7 good high yield savings accounts that are out there. And you can watch that over here, or I have it linked in the description below if you want to watch at the end of this video. The fourth way you can make money passively is through CDs. So for CDs, you want to find valuable CDs around your house, and then you can rent them out to your friends and family for a little bit of income. I'm just kidding about that. In the finance world, CDs are actually certificate of deposits. CDs are offered by banks and credit unions where you can put a fixed amount of money into these CDs for a set amount of time. Now, these set amount of times could be anywhere from a couple months to a few years. And generally for CDs, the longer term CDs, or the ones where you have to hold your money in for a longer period of time, will have a higher interest rate on them. CDs can also be federally insured up to $250,000, so it is very risk-free. The only thing to note is that some CDs require you to have a minimum deposit, for instance $5,000, to get that interest rate at the end of that maturity date for that CD. So a good website if you want to compare different CDs with one another is through Bankrate. Now on the Bankrate website, it makes it really easy to compare and contrast different CDs versus one another. And you can see, like in the Popular Direct one, there's a 5.67% APY. You need at least $10,000 of a minimum deposit, and you have to hold it for 1 year. You could also look at the star rating for the FDIC, and then if you click on the drop down on Bankrate's view, it'll actually show you the pros and cons of that CD. And you can keep scrolling for a while, and there's tons of different options that are available to you. These 4 strategies are really great ways to start building up your money passively and are a lot easier to set up and a lot less headache to get going with. Every website I went over today is linked in the description below, along with any videos I've made on these topics are also in the description below. Thank you very much for watching, and I will see you in the next video.